We have seen our favorite IT stocks falling sharply in the last many months. Many of your portfolios might also be in the red because of this. Yes, the entire market has fallen. Nifty has fallen by nearly 15%. Bank Nifty has fallen by nearly 20%. But Nifty IT, the flagship index of the IT sector, has fallen by nearly 30%. From their all-time highs, Infosys is down by 25%. Wipro is down by 43%. Even TCS is down by 18%. But whenever we feel like these stocks are going to take support and move back up, they continue to keep falling. So in this video, let's discuss why IT stocks are falling in the first place. Is there any hope for the stocks in the long term? And what and how you can invest in these stocks for the current scenario. This is Ajay Ajith. You're watching Market Feed. Let's get started. So first, let's understand why IT stocks are falling in the current scenario. The first major fact that you have to look at is that IT stocks all around the world, in fact even Apple and Microsoft, even they have fallen by 25% in the last 6 months. And there surely is an effect of this scenario in our IT stocks, Indian IT stocks as well. But let's get into the three major reasons why our Indian IT stocks are falling right now. Reason 1, high valuations in the post-COVID rally. If you look at the charts of IT stocks, Infosys, TCS, Wipro, any of them, you can see that their rally after the 2020 COVID crash was phenomenal. Even now, if you look at the Infosys prices, it is up by more than 78% from where it was just before the COVID crash. That is unbelievable, right? Even after this much of fall, Infosys is still 78% up from its pre-COVID high. So this is the right point to take a step back and look at the charts of IT stocks. Are they really falling, or is this just a retracement? Anyone who would have invested in the top, they would definitely be trapped. But anyone who has been invested for the long term, way before all this COVID rally and everything happened, they would still be sitting in a lot of profits. So coming to the second reason of the fall, high employee retention costs and fall in margins. We have seen that IT sector has always enjoyed a high margin percentage. That means for every rupee revenue that they are earning, they are generating a good chunk of that as profits. IT companies, they are having to pay their employees more because of the current scenario, because of the high demand in the IT sector, not just in India but also globally, right? So to compete, they have to pay their employees more to stay in the company, and that is causing a fall in margins. Because whenever their expenses increases, automatically their net profit decreases. Then the reason 3, this is something that we have already discussed about. Higher interest rates in the global banking system and inflation has caused a lot of IT stocks to correct. Because in this current market scenario where every stock is falling, we have seen that IT stocks, or generally speaking, stocks which have higher price to earnings ratio, high PE ratio, they are the ones sharply falling. So IT sector always has enjoyed a high PE ratio, and now they are falling sharply is what we are seeing. In fact, we have shared a video here that talks about why the stock market falls when interest rates in the world increases. So now that we know the three major reasons for the fall, let us look what the history tells us. Has this always been the case? Have IT stocks always been prone to market falls, or is this something that is currently happening only in this scenario? One thing that you can note here is that IT sector stocks have always been volatile during market crashes. If you keep apart the 2020 COVID crash, that is where IT stocks actually benefited because of the work from home scenario. Except that case, in most other market falls, IT stocks have generally fallen more than the rest of the market. So during bear markets, IT sector stocks have always underperformed the market, and during bull markets, what have we seen in the 2020 post-COVID rally, even in 2021, IT sector stocks outperformed the market. When the rest of the market gained by like 10, 15, 20%, IT sector gained by 50, 60% is what we have seen. We have seen that when the market consolidates, IT sector stocks also tend to consolidate really well, but when the market is moving, they move even more than the market. That is why during the consolidation phases, we get a false impression that IT sector stocks are always stable, but this is not the case. That means one thing that you have to understand here is that investing in IT stocks will always make your portfolio more volatile. Again, this is purely psychological. If you're not affected by this, IT sector stocks have always given more returns than the rest of the market. right? So you have to be understanding of this volatility and be prepared to accept it, give enough allocation that you are not scared by it, and then you can make good returns in the long term. So yes, looking at the history, big IT sector stocks falling 50 to 70% is not something new, unfortunately. Even if we look at Infosys, TCS during the dot-com crash, during the 2008 crash, these stocks have heavily underperformed the market and they've fallen by a lot. So history tells us that any sort of fall is always possible. It even tells us that a bigger fall could be possible in this current situation as well. So one thing that we have to understand here, one really important thing that I want to tell you is that whenever the bull market happens, whenever there is a rally in the market, whenever IT sector stocks tend to perform really well, investors get overconfident and they start giving more and more allocation to IT stocks. And this is where the trouble begins. So history actually here teaches us to be humble about IT sector stocks, not to feel overconfident about them, to give proper allocation to these stocks in our portfolio so that even when there is a crash, even when these stocks start to move down, we won't feel that much intimidated by it. So now that a brief historical analysis of the sector is over, let us look at what analysts are telling us in this current market scenario. They're telling us that Nifty IT as an index is likely to take support near this 27,000 zone. So again, Nifty IT is the index which tracks the movements of major IT stocks in the country, and if this sector takes support and if it moves back up from this 27,000 zone, it is likely implying that major IT stocks including TCS, Infosys, even mid-cap stocks like Coforge, they could take support at this zone and start moving back up. Global peers are also stating that tech-heavy international indices like Nasdaq also might take support at these zones and start moving back up after their phenomenal falls for the last 6 months. So it is really easy to understand why these analysts are telling that the Nifty IT might take support around this zone. If you look at this chart here, it is very obvious that 27,000 could be or could act as a really important support for the index. And in our analysis, the next important support is at the 24,000 zone. But something serious would happen if both these supports are broken, because the next important support is only at the 17,000 level. Yes, 17,000 is a really important support for the IT index because that is a zone that was a pre-COVID all-time high. But analysts are really confident that the current zone of near 27,000 will act as a really good support. So let us know what you think in the comments down below. Is Nifty IT likely to take support from here? I feel like there is still a bit of fall incoming and we can always be prepared for it. Because the interesting thing here is that the same analysts had said that the 30,000 zone would be an important support and that the 32,000 zone would be an important support. So it is really important to do your own studies and analyze according to your levels. Just like we did now, according to your levels, what is the major supports for the IT stocks that you're invested in and what can be predicted from these important levels. So let's come to the conclusions of this video. We have discussed why IT stocks are falling right now, how they have behaved in the past during such falls, and what might happen in the future, which all levels are important for these stocks as well. And now the major thing left to discuss is only how to invest in these IT stocks. So let's get right into it. IT stocks have always given great returns to investors and it would be a blunder not to have any of them in your portfolio. But there is something to understand here. Many do not understand the risks that these stocks entail and they end up giving more and more weightage to these stocks in their portfolio. So that's something we would like to change. If you are a person who has only invested in IT stocks, it's time to revisit your portfolio. Think about adding more stable stocks like FMCG stocks, which always tend to be stable. Even when the market is moving up, they might tend to underperform, but they're really stable because even when the market falls, they don't fall by as much. In fact, if you look at the Nifty FMCG chart right now, they're near an all-time high. So the best method in which you can invest into the IT sector is through a systematic investment plan. In our last video here, we had discussed how to set up a SIP on Zerodha. So find the major IT stocks that you love. In fact, study them properly. And if you're too lazy to do that, just invest in any large cap mutual fund. They'll obviously be invested in the top IT companies in the country. Or if you want to specifically look at IT sector stocks only, you can also look at major mutual funds in the country which invest in IT stocks. Or if you want to directly invest in the IT stocks, you can do an easy and simple hack. You can open the constituents of any IT mutual fund and you can look at which are the major IT stocks which they have invested in. And you can think about adding these specific stocks to your portfolio after doing the necessary analysis. So the major takeaway that you can have from this video is to reduce your allocation or find the ideal percentage for IT in your portfolio. And think about having a systematic investment plan where even if the stock moves up or down, you are constantly investing a small part of your income into these IT stocks for the long term. As a trader, you can always go long or short in futures so that even if the market falls, you can make really good profits from it. If you are an investor, there is a tactic, hedging tactic, where you can use options to hedge your long-term portfolio. Let me know in the comments down below if you need a video on that as well. And do subscribe because the next video is on the best 5 IT stocks that you can buy in this market scenario. So yes, hoping that you have understood all the concepts that we have discussed in this video. If you have any further doubts, do let us know in the comment section down below. And do remember to stay invested in the IT sector for the long term. This is Ajay signing off. See you in another video.